Hello and welcome back to another episode of the Investor Financing Podcast. Today is going to be one of those conversations that I feel like is going to bring tremendous value to everybody. We're going to dive into a lot of like meat and potatoes. And we've got the number one tax strategist that's going to join us. He basically helps high income earners lower or eliminate tax liabilities using advanced strategies and using their savings to invest in real estate and other assets. And we're going to just kind of dive into this. Guy's got a ton of experiences from real estate investing, business acquisition, franchises. So he's done a lot of things that you, the listeners and watchers in the future here, they're going to watch this YouTube channel, are going to get some value out of it. He's like the number one authority in the tax strategies spot. So this is going to be great. He has a book called Build Your Own Economy, which I just like, just the name alone. I'm going to go out and get the book. Hopefully it's on Audible, but if not, that's my recommendation because I love Audible when I go for walks. But please welcome David Perez to the show. Thanks, David, for joining us.
Hey, thank you for having me.
Yes. So let's just walk us through, who your avatar client is out there and then we'll kind of dive into like strategies and things that might help these viewers out there with their businesses and their tax situations.
Awesome. Well, first off, I'll start with, I believe everyone has, it's your right to not pay taxes. I believe that with all my heart. Like the tax code was written to be used. And I think we as people should use that code to the best of our abilities to not pay taxes. And over the years, I have had the opportunity to be involved in a bunch of companies and businesses that I've owned or partnered with or done something with, and I've learned a lot. And one of the key trends, and this is how, and truthfully, it's because I encountered it, is that I find that people who are on the way up, let's call them on the way up people, they're people who are grinding, they're hustling, they're making more money than they've ever made before. Typically, first generation wealth is being built. I find that, there's this need to grow. However, there's a lack of planning. And so the customer that I serve best is typically the person or persons, they're business owners, they're high income earners who are on the way up, who are too busy working and grinding and making it happen for them and their families, typically family people, to neglect to plan for the unexpected, which is taxes. Taxes takes 30 to 40% of our money over the course of our life, but it's the only thing that most people don't plan for. They plan for death through life insurance, right? They plan for health scares through health insurance, but they don't always have somebody in their corner to plan for not paying taxes. It's like, I think it's because most of the people I serve are first generation kind of wealth building. They didn't have parents or grandparents who said, hey, you should be thinking about these things, plan, right? You should be thinking about your estate plan and, your inheritance taxes and all that stuff. So these are the people I serve the most, is typically the people who are just hardworking people who are making a bunch of money, who just don't know how to plan because they've never been put in this situation before.
How did this business for you evolve, this becoming a strategist like this? Was this it sounds like you've done so much in your life and then you really kind of found your calling because you have a background that most people don't have experience in all these different avenues, and now you can kind of give advisory services on a high level. Is that how this kind of evolved for you?
Well, interesting enough, I've been in the tax industry specifically for about 15 years, and I entered it in a non-traditional way. Actually, I when I got into taxes, the only the reason I got into the industry is I was in real estate. I was a real estate agent, or just a realtor at the time. And this was back in 2006. I got my license late 2006. And I thought, I was in my mid 20s, and I thought, man, this is it. I'm going to be I'm going to be a badass realtor. I'm going to make a ton of money selling real estate. This is my future. I want to buy real estate at some point. Well, real estate was hot at the time, and I became a real estate agent because that's what I thought was booming. And then obviously within the next year or so, the market crashed and everything was for sale and nobody wanted to buy, and I had no clients. And so I was kind of devastated at the time because I didn't really have a plan. I thought that was the plan. And a buddy of mine at the time, we're having a drink and he says, "Hey man, I was talking to one of my cousins at a family reunion. And he says, he's in the tax industry, man. And he goes, he seems to be doing well and, doing all these things." And I looked over at him and I said, "Taxes?" I said, "Who wants to do freaking taxes?" And he says, "Well, my cousin, I'd like for you to meet him and talk to him and all these things." And I said, "I don't really want to do that." He goes, "Hey, well, why don't we go on a quick trip to Dallas and we'll meet him and some other people and we can talk business." And I said, "No, I don't want to do that." And he says, "We're going to have some drinks and party." I said, "All right, I'm in for that." Right. So I go to Dallas and I meet this group of people who are in this tax industry. And I really wasn't there to learn anything, but I was just listening. And then somebody said something. I don't remember who the person was. They said something that changed my life. And they said, taxes are recession proof. No matter what you do in life, taxes won't go away and it will never be impacted by any economic condition. And I thought, okay, I'm listening. And so I got into the tax industry about late 2007, 2008, early 2008. And I primarily served a lot of, we'll call it, people who don't pay taxes. Let's call it that. There's 67% of America who don't pay taxes. Let's just say I served that group. And I served them really well. In fact, over the last 15 years, we've prepared over 50,000 tax returns, and not personally, through my company. And, I grew a company. I opened one little office to do retail taxes, and I grew it to as many as 15. And so I had a ton of customers, a ton of operations. I had 200 employees. And in 2015 is when I really started to make money. I mean, most of it was all going back into growth. And when I made money, obviously when you make money, you get a bill from the IRS. And I got this, I filed my tax return and I said, I'm being very frank. I said, "What the fuck?" I said, "I cannot believe that I'm the guy who helps people file their taxes, yet I'm here writing a big ass check to the IRS." And it was an eye opener because it was like, it was the chef that just didn't, that couldn't cook his own food anymore. Like I was like, this is stupid. So it sparked an interest in me to stop thinking about just doing taxes and to think about how I could plan for taxes. And over the next 5 years, from 2015 to about 2020, all I did was study about how to mitigate my taxes, how to eliminate my taxes. And I did it only for me. It was very selfish. And my friends, right? Because people come to me and ask me questions and I wanted to share. And in 2020 is when it all turned around for me because, the pandemic was hitting second quarter, everything was shutting down. And I kept on getting call after call after call from business owners who were just shaken up and didn't know what to do. And I would talk to them. And then all this free money came out into the world and all these, and everybody was calling me, asking me questions. "David, how do I report my taxes?" And "David, I need help with this business stuff." And I just realized at the time that I was just super qualified to be able to help these people. And it just became a passion to start helping people. And a lot of that was done for free at first. I was like, well, this is how you avoid paying this. And this is the structure you need to set up your entities. And this is how you do it. And so really, it's been about 3 years that I've been in tax strategy primarily as a profession. However, I've been doing this since 2015 and I've been in the tax industry forever. So I don't think I found it. I think it found me. Like, I think I've just been preparing. I've bought businesses. I've done a lot in between all this 15 years, by the way, but this is just really how I got to this point from a tax perspective.
Wow, that's pretty awesome. Yeah, it's amazing. Just like even through my network, so all my friends mostly are entrepreneurs. I don't really have many 9 to 5ers. They're all seem to be in real estate, business ownership. It's what I'm drawn to because I'm passionate about, financial freedom and figuring out how to become financially free and figuring out how to like eliminate tax burdens, right? The way that there's all this tax code, right, which goes way over my head, but I started grasping all these ideas: cost segregation, accelerated depreciation, Section 179, right? Like, it's so important for people out there that are business or entrepreneurs to be paying attention. Like, you don't have to be the expert, but you need to, I like the book Who Not How. who's your
Oh
who
yeah.
in this tax strategy, right? Like who's going to help you. So I've picked up all this information, and I do financing, I do commercial financing, I do a lot of SBA financing for clients. And I find myself giving them little tips that I've learned, right? Like, and then, or pointing them to the right direction because I'm not a CPA or tax strategist or anything like that. But it's important for everybody to know these strategies. I look at my brother who's a high income W-2 employee, and the dude's in financial services, right? Super smart, economic degree. And he doesn't know the first thing about tax strategy. And I'm like, there's got to be something you can do, man. You're paying a couple $100,000 a year in taxes, and like, you probably just need to talk to somebody that's not in your little, nerd world of financial services, but over in that world, right? Like, it's true. Like to him, hey, I've got it. I'm in his mind, he's wealthy, but he could probably be 5, 10x ahead by just like reaching out to a tax strategist and figuring out like, well, I am getting W-2 income, but what if my wife had a real estate holding company, or, like all these things, or if we own some short-term rentals and we can, actually materially participate in the business. And
Heck yeah.
they don't think about this stuff. It's like you're working and you're paying like over a third of your income in taxes just off that part, not to mention what we're paying for sales tax and all these other
Real
tax.
estate taxes.
We're taxed like in 7 or 8 different ways, aren't we? It's like crazy.
Yeah, they call those SALT taxes, state and local taxes. SALT taxes kick your butt too. That could take 6 to 10% of your money on top of that. So you've got it right. By the way, all the strategies you just kind of referenced are all a lot of the advanced stuff that we would be talking to every single client about, because there are opportunities to mitigate your taxes. And if you're hanging out with a bunch of business owners, this is like the hottest topic. And you're right, though. There's a lot of people out there that I think they just accept it because they don't know any different. And that's what you're pretty much saying. They don't know different. And that's the question. It's so funny that you say this too, because I find that the people you would think are the most knowledgeable in finance and tax are usually the ones with the least knowledge. So weird. It's so weird how you said that.
Yeah, it blows my mind, and it's like I actually find this stuff kind of exciting now because it's just one of my friends is very successful real estate syndicator, and he goes, Beau, last year I made $4.6 million, and he said, but I had 5.6 million in losses from all my depreciation and whatever, right? And so that's what really clicked. If these people, everybody always wonders how these big wigs don't pay taxes, is because they learn about all these different tax codes that they can apply for. And like, even, if section 179, if you don't know what that is, you should like look into that. Is there any, like for me, even though I don't know like a ton, I'm always educating myself. And I'm like, I always think like ahead of time. I'm like, will I have a taxable consequence this year? If so, what can I do right now so I can eliminate that by maybe buying some equipment or whatever? Could that be that a 6,000 pound car, right? These are the things we need to learn about. It's like, it's such a big chunk. People are always focused on like making more, but like, why not keep more? And that's what you do essentially.
Yeah, definitely. What you're saying is exactly right. You've got to be planning for this stuff. It's not tax strategy is an annual thing. It's not just a fourth quarter or December strategy or filing deadline strategy, which most people take. This is literally an ongoing lifestyle. And it's not by the way, I'm not a proponent to say that, hey, all you have to do is just save. I'm not a Dave Ramsey, just save all your money, pay down your debt kind of guy. I think there's a lot of good debt out there that you can leverage. But the reason I reference that is the reason that I'm tax thoughtful or tax minded all the time is because everything that we do as entrepreneurs is pretty much tax deductible if you do it the right way. And it's not to save money. It's not to give away my money. That's a better statement. Most people think about saving. I just don't want to give it away. I mean, I'd rather you blow it than the government blow it. If you're not going to save it, I'd rather blow it on whatever I want because that's my decision. And that is really one of the reasons that I got into this is that, I mean, I think only people who have high incomes think this way, or at least people who earn their high incomes. They realize that it's not fair to give a large chunk of my money every day to a system in most cases that doesn't support the things that I want to support. So I'd rather be a philanthropist, or I'd rather be a humanitarian if I could, right? With my own money. That's just my thoughts. If that's the way we're going to give it away, at least let me decide where it goes.
I agree 100%. I mean, I agree that, we have to have some systems in place, but I always feel like, look, I know how hard I work, and I want to keep as much money as I can, because I feel like I'm looking over my shoulders and I'm working harder than most of the people around me. And so every dollar that I save through, tax strategy makes more sense. So like, that's my goal every year, is just like I'd rather invest in my business than have a taxable consequence. And I feel like if you're planning, that's what you do, right? Like you can invest in your business in some way, or buy more real estate. And if you're building a strategy, so you like, okay, I need to buy another property this year. I need the depreciation of this property. I need to accelerate the depreciation because this was the last year of bonus depreciation. All this stuff that, like, if you just think about, is just going to keep way more money in your pocket, and you're going to like live way better. And most of the things that are deductible that we're buying as entrepreneurs are going up in value too. So it's an appreciating asset. So it's a total win-win. And that's why the tax code was there, because they want entrepreneurs. They need us. They need us to keep growing. And because, we buy material, we bring a lot of,
well, you put jobs, we bring jobs, we bring in housing, we invest in energy, we help the country run. I mean, the government is the second largest, buyer in the country. They're not the first. It's small business America that runs this country. The government second to that, not big corporations. It's the government that subsidizes the rest. But small America, man, that's what it is. Us guys employing people is where it's at.
Walk us through, if you don't mind. You don't have to give specifics, but walk us through like a high net worth client that you had, and kind of some cool strategies that you guys implemented.
Well, I mean, let's start with a type of client. What kind of audience are we talking to here? So I can maybe use one of our current clients that maybe fits into the audience. What do you want to speak to?
We have, I mean, I think there's a lot of maybe business owners that own, franchise schools. There's a lot of syndicators that listen to this, maybe.
Awesome.
That own real estate. There's some high net worth W-2 corporate level people that are now getting into syndication, but those would be probably the people that would be interested in this conversation. Then there's obviously some people on the up and coming that really probably aren't at the level where they need too much tax strategy. They're flipping houses right now, maybe trying to work themselves up.
Make cash. Got it.
Yeah.
Okay. So, to talk very simply, I mean, we have clients of all shapes and sizes. We have clients that do over 50 million, some that do, as low as 500,000 or something. But I would say that let's just talk about some of the most common strategies we'll apply, and then we'll talk about some most advanced strategies so that everybody gets this. I mean, first and foremost, let's talk about I talked about this in a video recently, but we just had a pharmacist last week. A pharmacist business owner. He's not an employee. He owns his own business. In fact, he owns several pharmacies. So he does a few $1 million in sales. Very, very, by definition, a successful gentleman. And he had a tax liability year over year. We met him about a year ago. He came to us, asked us for some advice and guidance. And the first thing that we do when we meet somebody is we do an assessment. An assessment, we consider it three things. So basically, if you were to go to analogize this, a really good way is to say, if you had something wrong, a pain or an issue, a health issue, you'd go to your physician, and the physician would say, I can guess at all this, but we should run some labs. And that's really what an assessment is to us. We do some labs. We learn a lot about you, because I don't believe that tax planning or a strategist is supposed to just talk about your taxes. I believe there's 3 pillars that they stand on. Number 1 is asset protection, meaning does the person that we're dealing with right now have a strategy to protect the assets that they either possess or are going to possess? And that could be as simple as just a trust, an estate plan, a will, but more importantly, do they have a barrier wall? So we look at entity structure. Then we look at tax mitigation. Do they have a plan in place to lower their tax liability? That includes a key bookkeeper that is managing the books to make sure that they are aligned with our goals. And do they have the right people on their team to make sure that happens? So we assess that. And then we look at all the things from marital status. In this case, this gentleman had 3 children. We looked at any investment properties. In this case, this gentleman had 8 properties under management that he managed, his wife managed. We looked at any investments that he had. He actually had some 401ks that he had set up through his own company. He had IRAs that he had set up outside of that, Roths. And I can't remember if he had any other things, but this is what come to mind. Then we looked at, what his main residence was. Is he maximizing a home office? Then we look at, what else did we look at for him? Obviously, his children, how old they were, to determine if we could pay them. And in addition to that, could we fund child retirement accounts for them, or maybe college funding? We also looked at the children to determine if they were old enough to maybe need their own residence. One of them was in college. So we recommended some strategy there to acquire a property as a rental and then lease it back. And so there's some things there. So we looked at all these things. Then we look at wealth, which is, what are they doing to accumulate money passively, right? How are they building passive investment income? What kind of portfolio do they have? What's the value of that portfolio? Is there an exit strategy, or is this an accumulation strategy? So we look at these 3 areas, which is asset protection, tax mitigation, and wealth building. And in this case, first thing we noticed with this gentleman is that 2 of his pharmacies were structured in partnerships, and the other one was a sole proprietorship. So we restructured. Nothing was an S corp. If you're familiar with that, it's subchapter S. We realized that he could save at least 15% in payroll taxes, or actually in self-employment, and avoid some payroll taxes by paying himself. Even though, by the way, he was already paying himself, but he was doing it under a partnership, which was totally wrong, but we fixed it. Then he was maximizing his wife was on payroll, but the reason his wife was on payroll is just to fund a 401k. Which obviously is a strategy, not a bad one. However, if you're funding a 401k and then he was matching with the company, which is good, but he had no control over the money. So even though he may be putting into it, fees are eating into that thing, and he's losing another thing, which is the ability to use real estate to offset active income. Because both him and his wife were employees, they could not benefit from real estate losses because they're active employees in a business and they don't actually participate in real estate. Although they did participate in real estate, rather, they just weren't maximizing it. So we then, fired his wife. So she's not an employee anymore. We stopped the funding of the retirement account. We funded an additional Roth outside of the work because they still wanted to do that. We designated her as a real estate professional because she does manage all the real estate properties that they currently own. And then we restructured the way they had their bookkeeping to start taking some of the assets as assets rather than expenses, because those were misclassified. I'm going long here. I know this is going long-winded, but let's just say I think that the liability was actually, this was a doctor, not a pharmacist. That's another guy. This is a doctor, and I think his liability was around $380-something thousand when we started, and we got him down to about 92. I think was the number we ended at. So about 200,000 in savings just by some restructuring of an organization, by real estate investor status, paying his kids, funding that. They purchased a rental home for their daughter after that, which was really cool. I mean, all of this stuff just happened or is in the process of happening from about a year ago. So, I think that was a great success for them, and I know they're excited. It was a fun time for us as well.
Yeah, so that's amazing. So everybody that was just watching that and listening, there's so many elements that go on it. And I loved just the thought process. I was like, okay, this is pretty cool. That's what it's all about, right? You can dissect this. So really it usually starts with an intake call, right? Like a discovery call. Cause you got to kind of what do you look like? What do your taxes look like? And then you consult, and then yourself. It sounds like you have different um, partners you work with and different strategies for entities and different stuff like that.
Yep.
Or is that all done in house?
Everything is in-house. So we have in-house staff that handle all this stuff. The interesting thing is that the majority of people have somebody in their corner, and we're not trying to take them away from them. Like if you currently have a CPA or a tax professional that you're working with, we don't really need to take you away from there. We need to coach you and give you the right tools and to give them the right information so they can implement some of these things as well. So, typically what I found, just like I mentioned, our current customers are typically growth oriented, scaling at the time. Their income is increasing year over year, and they don't have a plan. And so what I find the most common is that they started with somebody when they first started their business, and they've been with them for years in most cases. And what I have found is that the majority of them are working with a great professional, but they've outgrown that professional. That they just the tax professionals that today are typically overworked and underpaid. They take on too many clients because they don't get paid enough per client, and because they don't get paid enough, they can't deliver to their clients the best possible outcomes. They can just be historians because a true professional is going to be proactive, not reactive. They'll be working with you on an ongoing basis throughout the year versus just calling you and saying, hey, we're the tax docs, we need to meet the deadline. And so this is kind of the scenario that I get all the time. Like in this case of a doctor, I can tell you contractors, I can tell you, I mean, there's so many people that we deal with in different industries, investors, exit strategy people, syndicators, all of them, maybe we can't help everybody because like to that extent, 200,000. However, if you could see just the holes that you're missing, the gaps, that's the most important part of this process. It's the gaps. If you just knew the gaps, I mean, syndicators, for an example, they may be making money and probably not paying taxes because they probably have a significant amount of depreciation every year, of course, if they continue to do this. And it depends, by the way, if they're also limited partners versus general partners, if they're active versus pack. In fact, there's a lot of factors there. However, the one thing they neglect to do is have an estate plan that's in place in the event that they die. That sounds crazy, but I mean, you imagine if you had 10 syndications that you're an involvement in, then you have 10 K1s that come to you, you pass away, and maybe it's your wife or somebody else who heirs it. And they have no clue how it's all structured. It wasn't put into a trust. There's all this probate stuff going on. You're losing, and this is not just legal. This is tax because let's say the assets are in excess of the inheritance tax. And now we have these things, and it's just so many things that come into play that they may not be thinking about. And it's not necessarily their job to think about them. They should have somebody in their corner to do it. That's just what I'm saying. It's just having a person that you can call and work with and say, this is what I'm going to do. What do I need to be thinking about? My favorite question is, what don't I see here?
Mm-hmm. A lot of my friends and colleagues are really going after acquiring businesses right now, as well as real estate, because like there's so many baby boomers that don't have succession plans for their businesses. I think I mean, from an investor standpoint, like that is attractive because you can get high leverage SBA financing. You can oftentimes get seller carryback, and like I like right now seems to be a great time to get these retiring people that have large equity stored in either business or real estate to sell on installment, and like getting a good tax person to give them, hey, this might make more sense for you instead of taking all the money now to do installment sales. So that's the way my brain works. I want to know these things. So when I'm like talking to somebody who's built up a significant valuation, whether it's in real estate or a business, I want to like be able to say, hey, well, maybe check with your tax person. If you sell it on installment, you might only have to pay, tax consequence for what is paid this year, right? And like, so how do I reverse engineer all this stuff to make it a win-win?
That stuff excites me. In fact, we're in an acquisition mode. We're purchasing some businesses right now. And you're exactly right. For those of your viewers who are maybe looking to acquire businesses, this is an optimal time, especially to get favorable terms with the market being where it's at, rates being even higher than ever, or not higher than ever, but higher than they were 2 years ago. Even though yourself, I'm sure you're doing SBA, those rates are not that attractive as they once were, which valuations of businesses now need to come down. They were very high, and now they're coming down. And so now the sellers themselves have to factor in interest. They didn't have to factor that in anymore. Now they have to factor in servicing of debt. And if debt can't service the note, then they got to drop the price. And then you can also incentivize some of these older sellers, obviously, with some seller carried financing, some terms. You could do exit strategies with these guys. What we're doing in some of our deals is leaving the person in charge. Obviously, this is a common thing, but the difference would be, let's say you're buying a business where the owner can stay on for a 3-year term with a, we'll call it a retention clause to keep all customers in place over the 3 years to get paid 100% of the buyout, maybe leaving them 10% or 20% equity in the deal because I'm going to flip it eventually. Maybe they need to keep some equity and some stake in there so they keep those customers on the book for my flip. There's a lot of things that to consider, and to be very creative right now is amazing. If you have the skill sets to be creative, I've actually, just to be between you and me, I've thought about putting on some sort of like creative buyout program, like just talking about it, sharing the strategy. Cause I've done this for a few deals and I really enjoy it. I mean, obviously the implementation of things sucks. The deal structure is the most fun part. It's the actual acquisition part that sucks, but it could be favorable for the right person.
Yeah, I mean, I think that would be a really good event. I think there's a lot of people that have interest in it. I know a lot of people I'm in a mastermind group with close to 900 guys, and they're all, decent net worth type of individuals, real estate business owners, and they have little micro tribes in this group. And like, there's one for small business acquisition. That group just focused on, they're looking at deals every day to buy every single day. And then, I've been getting more fired up just seeing as I'm financing these deals, and I'm going, wait a second, I'm getting you 90% leverage from the SBA. We're getting 5% seller carry on standby, and you only need to bring in 5%, and you're buying a 30-year business that's every year is spitting off at least $200,000 to $500,000 net to you. Like, where else can you put in a little bit of money like that and get such a good return? And for an established business, so it's like, then a guy came to me and he's like, hey, I got this deal. I just bought another deal, but I can guarantee the loan, and he makes a couple $100,000 a year. And so he needed a little equity. And I said, okay, well, I'll put up $50,000 in the deal. Now I'm going to own potentially 19% of this deal. I don't have to go on the loan because I own less than 20%. And he's guaranteeing it. And I believe in the deal, and it's upside. There's real estate. We've got extra acreage where we can build out a bunch. So it's like, I want to get in there. And then I think for people that are listening, if they have somebody on their corner that could talk to people, right? That's cool too. Like, hey, seller, this is kind of the tax plan for you, and this is why it's advantageous for you, and this is why it's advantageous for the buyer. I think that's amazing. Truly amazing. So you got you have an event that you put on mostly for tax preparers. That's Tax Business Growth Academy or Tax Growth Con. Yeah.
Let's talk about another event. So we're about to launch this tomorrow. I should tell you about this one. I think your viewers might want to do this one. We are going to have these real estate tax strategy boot camps. So our first one is next month, March 22nd and 23rd in Dallas. This is typically something we do for our current customers, our clients rather. We're going to actually make this one open to the public. This is going to be a cool event for 2 days. What I do is I actually dive deep into real estate investing strategies that have tax favored consequences. We're also going to be talking about specific deals. We're going to be talking about acquisition of deals, syndications, and their consequences, because there's a lot of unknown when it comes to investing in real estate, because I think there's a lot of syndicators out there that are very, very, very strong. They know what they're doing when it comes to the acquisition of properties, and they're very well suited to do the job. However, they're very, very shitty communicators when it comes to the advantages of real estate and taxes. They just sell it all. Hey, it's all tax advantage. Yeah. Just give me $200,000 and be in the deal. You're going to save a ton in taxes. There there is some truth to that, depending on when they're going to save the taxes. They may not save them in year one. They may be year 5 when they do the exit rather than the year 1 they thought they were going to get. And I get a lot of clients right now who come to me who have been sold into syndications and other type of investment deals that they can't benefit from the losses today. Obviously, they don't show any profit on that particular property. However, that's not what they were investing for, and so they're tricked. And this is things that we'll be teaching.
Yeah, that is. Everybody always talks about, well, you're going to get you're going to get a loss on your K1, but like if you're a W-2 high paid guy, you can't offset that income, right? And so
we teach the strategy on how to avoid that, how to get around that. I can teach you how. We're going to talk about short-term rentals. We're going to talk about real estate professional status, 1031 exchanges, how those can be impactful for those of you who want to exit properties. We're basically going to break down the most highly effective strategies that we know about, and then tax implications of those. And then we'll talk about just regular basic tax strategy, thing that you probably need to know more about and how to implement those things in your business today. This is something we've done for our clients for years now, but we're barely going to basically take it to market as a boot camp. So it's 2 days, Dallas, Texas, 22nd, 23rd. It'll be a link on my site as of tomorrow, davidaperez.com, davidaperez.com. You guys can get a ticket to that because that's for everyone. We only have 50 seats for that event. I think we've already pre-sold like 20. So we probably only have like 30 left, but this is going to be a fun event. I'm super excited for that.
That's awesome.
Hi, this is Beau, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
Let's kind of wrap up, and just, if you don't mind sharing about your book and what Build Your Own Economy is all about.
Cool. So first off, you may not, I kind of share something with your audience so you guys understand the concept from how I came up with this. So when I was born in 1983 to a single mother. She was 18 years old. My biological father didn't show up to the hospital, abandoned me at birth. The doctor told my mother that I was going to be a very special child, and my grandparents were there. They said the same thing to them. And they were really not lying. In fact, I was a little special. I was different. I was born with a condition called albinism, which means I lack pigment in my skin, if your viewers can't see. So that's why when you asked me earlier, what ethnicity you are, I'm actually full Hispanic. I just look really white. So they told my parents I was going to be special, so special that I was going to be, in special ed. I was going to be a disabled kid all my life. And so I was treated as such. I rode the little bus. I was put in special ed classes. I was well taken care of most of my life by my family and the teachers and the school system. Kids weren't good to me. I was a little white kid in a brown school. So I was made fun of and picked on all my life. But for the majority of my life, I lived a very sheltered, coddled life. I was very well taken care of. I was loved and cared for, which was amazing, by parents who really took care of me. In my mid-teens, I come home from school one day, and there's 2 gentlemen wearing suits in the living room with my parents. Now, my family's we're not wealthy, didn't have very much money, but my grandparents raised me so that that's what they do. They're Mexican parents. My mom picked cotton and vegetables and things. And, my dad grew up in one of the poorest parts of the city. And anyways, so there's 2 men in suits sitting there, and they sit down, they ask me these questions. And as they're asking the questions, I ask, what's this all about? And my parents looked up at me and they're like, this is for life insurance. And so I'm 16 years old. I don't know what the hell that means at this time. And so I just answer the questions. I go to my bedroom, and later that night I come to the kitchen. I see my mom, and I said, Mom, tell me, what the hell is this all about? Like, why do I need life insurance? Because at 16 years old, somebody says life insurance, you just automatically think I'm going to die. And I didn't feel any different. I didn't feel like I had a disease or anything that was causing me pain. So I asked her this, and she said, well, son, we won't always be around. And so we know that when we pass, because it's my grandparents, somebody's going to need to take care of you. And whoever takes care of you, we want to make sure they're taken care of. And And that was one of the most, like eye-opening things for me, because I never thought about myself as a dependent. I never thought about myself as somebody who needed somebody to take care of me. And so it was like it was the day that I made a decision that I was never going to be a dependent again, that I was going to change my life. I was not going to let anybody take care of me. I was going to pull my own weight. I was going to do my own thing. And ever since then, all I've done is fight my way to proving the world wrong that told me that I couldn't do anything. And that's all I've done. And in about 2 years ago, I had already built these businesses. I've done a lot. I've proved everybody. It was really, by the way, most of my life is with a chip on my shoulder. I'm like, everybody who thought I couldn't do shit, everybody who made fun of me, everybody who told me that I was riding a little bus and I wasn't going to amount to shit, I was like, I'm going to prove them all wrong. And 2 years ago, I was sitting in a little workshop, and a mentor of mine looked over at me and said, David, I think you have a story to tell. Now, the story that I just shared with you, I had never shared before. This was 2 years ago. So 2 years ago, I'd never told anybody this. I never told anybody that I was labeled disabled. I never told anybody I rode the bus. I never told anybody any of this shit. He said, hey, I believe you have a story to tell. And I said, well, I mean, I don't think I have a story. And he's just like, I think you should write a book. And he challenged me to do it. And I said, I'll think about that. And as I started to think about it, he goes, just put your money where your mouth is, hire an editor, and let's get, and I said, oh, okay, I'll do it. Now, as I wrote my first book, I thought it was going to be all about business. And actually I was thinking about how do I create a book that would encompass like different financial aspects so that it could kind of tie together. Like you have to think about a whole picture approach and shit. That's my ideas. And as I was writing the book, I went to another workshop, and a guy sits next to me and we start talking. He goes, hey man, how you been? This and that. I didn't never met him. Anyways, we're just talking. And he says, what's a big project you're working on? I said, I'm writing a book. And he says, dude, what's the book about? And I started to share what it was about. And he goes, man, it sounds like you're building something cool. And I said, yeah, you know what? I am building. And so that was the first statement. I was like, I'm building something. And then he goes, tell me about it. And I told him all these financial things. And he goes, it sounds like it's like about economics. And then I thought, this is an interesting concept. And then for some reason, something hit me. I was like, I'm building an economy. And by the way, I wrote a whole book about like financial services that I never even published. And then I realized that I needed to write something different, which is this book now. And this book has nothing to do with finance. It's actually about how to overcome and take control back of your life. How life can be designed by you. You don't have to be a victim. You don't have to be told that you couldn't do anything with your life. It's not a personal development book per se. It's really just a structure or a framework that I've used in order for me to overcome the things that I was told that I couldn't. And then how do you actually build something that's unshakable? It starts with health, then it leads to wealth, then it leads to building a legacy with all the things that you've acquired, and then obviously living it all with core values. I teach a lot about that stuff all in this book, because that book came out of me in less than 3 months when I really committed to this, because I believe building something is unshakable is important to us. A lot of people will go through life being a victim to the world by saying the reason I can't have this or do this or be this is because of X. And I think we're all the result of our best thinking, and our best thinking is us. We can't blame anyone else. So just suck it up, deal with whatever's in front of you and kick ass, because that's what we're put here to do. And if you take care of you first, that's really what it's all about. You are number one in everything. And if you get that, then you stop saying the shit that people say all the time. Well, I can't get in shape because I have kids and I got to take care of them. I can't eat healthy because of my kids, or I can't save money because, we have to do all these things. No, it's all bullshit. It's all bullshit. If you start taking care of you first, the world all starts changing for you. And it's not who's in the White House. It's what's going on in your house. And that's really what this book's all about.
Oh man, that was really good. I was like, I don't know. That was a strong message that I was getting. I was feeling the whole, like your whole upbringing, and like I was picturing you, and like just like the amount of, I was just thinking about, riding the short bus and just how kids are so mean, right? Like, and all this shit you had to deal with, right? And like, but for me, like studying people that have become successful, it's people that can build that grit. And they don't, I was just listening to David Goggins' book, and, like it's a similar type of thing, right? We have to have those mental calluses, not only on our hand but on our brain. So I think that's
Heck
what
yeah.
I'm interested in definitely reading that book, because
Thank you.
I love that story. It inspires me, because even me, like I came with I was raised soft, right? And sometimes I'm dealing with my own chatter in my head, and I'm like, man, like I need to just push through this. Like there's like I have it good. You imagine coming from and then I'll drive down to downtown Las Vegas and I'll see all these homeless people and all these immigrants, and they have it like 1,000%. I'm like, on my worst day, my life is so blessed. And I do that sometimes from time to time. And then it's just like, you know what? Like, so it was an awesome, thank you for sharing that. I mean, I know,
Thank
you just started sharing that story.
When I start feeling that way, what I do is I either like anytime I get comfortable and I feel like life is good. This is weird, right? But anytime I feel like life is good, I overcommit to something bigger, which makes me activates me again. So if I make a bunch of money this year at the end of the year or before the year ends, as soon as it's in my bank account, I'm like, where am I going to deploy this money so I can feel broke again? So it's a habit of mine, and that keeps me hungry, and it keeps me pushing, and it keeps me focusing on building my own economy, because a lot of people settle, and it's it's easy to settle, but it's a hard life when you settle,
Yeah, totally. I think, and the one thing I realized is just going to this event with all these millionaire guys that I've known for a long time. Even these guys that are, I look up and I go, man, they just have it so easy, right? You go and talk to them, and they're like, they start telling you all the shit that's going wrong in their life. And so it's not just these, people with nothing. It's everybody's got shit they have to push through. We all do, right? And it's just like the people that can push through and have, I think you got to get yourself in the right room, right? Like your event is a room people would want to get to. You want to put yourself around people that are going to level you up. Like I podcast because I interview people like yourself, and I'm like, I get energized now. I'm like, yeah, I'm all excited. Then I'm thinking more about tax strategy and how I can help my clients, how I can help myself. And that's what I do. And that's why I podcast. And anyways, appreciate you.
You're doing good, man. You're doing good stuff.
Yeah. Thank you so much. And everybody, I'll link below to David's website. It's just davidaperez.com.
And I'll send you over a link to the bootcamp once this is over. It should be out tomorrow. We just hadn't published it yet.
All right. Well, really appreciate you and everything you shared, and I look forward to connecting with you. Hopefully, when you come to Vegas next time. And
heck yeah,
we'll go, yeah.
All right, man. Well, thank you so much to your audience, and thank you for what you do. I really appreciate your time, man.
Thanks so much.
Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.